Test, test, mic check, mic check. All right, we should be live. 40 minutes late, no problem. No problem. Hello, hello. Is anybody there? Crispy J, George, Sean. Okay, we got a couple people rolling in. What's good, Monkey? What up, what up? Yeah, camera should be okay, but all the old ones are gone. I had to do, man, this is such bullshit, dude. Such bullshit, chat. I'll tell you what happened in a second. We'll just give it a couple minutes and, you know, allow people to hop back on. Okay. Yeah, it did give me a chance to update OBS. And I updated, it was the Canon program that was chopped. Don't ever get a Canon camera, bro. Not for live streaming. Get an Elgato face cam instead. You don't gotta deal with this bullshit. Just stop working all of a sudden. Like, what? They were like, oh, your subscription's out of date. I said, okay. Well, let me go activate it again. They're like, oh, never mind. You're active. Are you fucking... And then, so my camera still didn't work for OBS, so then I added a new source of the same camera, and then that worked. So it's like, okay, I guess all my old ones I gotta get rid of, and luckily I probably should have tried to add a new one from the beginning, but I didn't think about it. So, oh, to add the time feature, the clock. You like that clock, huh? Yeah. I was trying to turn things on and off to try and, you know, fix shit. So I guess that was there. Why do you like the clock, Naruto? You at work or what? What's good, Flacco, Hatham, Convicted Capitalist, MJ, Dave. Yeah, we're probably not going to have like 50 people like we did earlier. But, you know, it's out of my control, man. It's out of my control. So, nothing I can do about that. So, let us start. This won't be a long stream because we'll still end it at 1. And I'll put out the market review, of course. But let's talk about this from yesterday as a follow-up. We'll start off with that. And then we'll move on. Oh, okay, Naruto, I appreciate that. That is pretty cool. All right, so yesterday, if you remember, right, what did we talk about? We talked about how price could take the lunch low and then trade up to these highs and into that imbalance. But I specifically told you not to trade that. I said demo if you want to, or paper if you want to, I don't care. But I told you we had such movement, such cleanliness in the morning that, you know, I told you I think PM session is going to be trash. I don't think it's going to be worth trading. But I still wanted to try and look for something to watch. But I specifically said like 4 times, don't trade this. Don't trade it. I think it's ass. Don't trade it. Okay. And so, of course, we actually do end up coming in, coming lower, right? You know, get that entry or whatever. and then almost immediately to stop, small imbalance here, and then, you know, this idea technically gets stopped out. Now, what can you glean from that? Number one, I told you it was asked to begin with. Number two, traditionally, the stop for the inversion, the way that I taught it to you, actually goes to the low. Now, had you done that on Nasdaq, you would have got stopped out. Had you did that on ES, you wouldn't have gotten stopped. And the market actually does give you an opportunity to get out at a profit, or at least out at break even, if you wanted to do so. Okay. And I'm not an advocate for holding stuff like that overnight, but the set and forget traders, I guess, probably would have did okay here. But that's just, you know, we ended up hitting that in Asia. Like, okay, but overall, you know, there's some good lessons in there. So, you know, understanding, right? I'm giving you my experience and giving you that insight of, hey, that was the opportunity for yesterday, and it won't be worth trading in the PM session, in my opinion. And, you know, not to brag or anything, but look what the PM session presented. Not a whole lot. And I tell you these things so next time it happens, for example, today, okay, right? It's the same shit. We had a beautiful buy model in here. We just took, I want to say that's yesterday's high. We just took that live on the session. So we'll just borrow that and put that over there. Right. And so what does a classic market maker buy model look like? Well, you guys already know. If it's a buy model, okay, it's going to drop down into either a higher time frame concept, like a higher time frame gap, imbalance, down candle, gap, you know, whatever, mitigation, all that shit. You don't have to have something that is there entirely, but what could also count is an old low. So you have London's low here from today, and then you have Friday's low, which might actually be the low of last week, if I'm not mistaken. Right? So we would look for consolidation or consolidation. We would look for that run on liquidity, and then we would look to get in sync with order flow that would seek opposing liquidity. Right? So if we drop down to, say, a 5-minute time frame, right, leading up to this run here, right, something like this, right, we can study this market maker buy model for today, and then, you know, that'll be it for today's stream. So, you know, again, like, I apologize, but this shit was out of my control. But that shit does, it like bothers me, you know, with that bullshit. Like, their failure of a program just makes you look bad, and I don't like that. I don't like it. Right? Original consolidation here. On a smaller time frame, you could also argue that this is a original consolidation too. And remember, you can have price is fractal. Okay, so what happens on smaller time frames happens on larger time frames every time frame. And market maker models, MMXMs, right? Buy models, sell models, it's the same thing. And I've shown you that before. You could have a small market maker sell model within a larger sell model, and it's the same thing. You could have a small time frame buy model within a larger time frame buy model. You get me? So, and that's why I'm pointing this out, because this original consolidation and then this original consolidation on a small time frame, it would look like an old low, original consolidation, manipulation, and then your target would be this. But this original consolidation, which is also low resistance highs, is actually distribution on from this original consolidation. So like there's basically a sell model here, right? You can see kind of the sell side of a curve here. Original consolidation, distribution, we trade lower, and then second leg or second stage distribution to go lower. Right? So then what would be the idea? Well, there's multiple. Okay. So what I'm saying is this. Original consolidation. Okay. We sell off, retracement, sell off, manipulation, right? Right here. So that would be your low risk buy. And then first stage accumulation, second stage accumulation to go to these highs. So this whole thing right here is a buy model by itself. You guys get that? But when you zoom out a little bit, oops. That second stage of accumulation to go higher here was actually the first stage of a larger market maker buy model. So don't miss that. How do you know when to hold trades? How do you know when to partial and hold the rest? There you go. How do I know when to leave a runner on if you trade multiple contracts? Hello. Okay. So drop a 1 if you guys are getting this. If you're picking up what I'm putting down, drop a 1 in the chat. I just want to make sure you guys are getting it. The market maker buy model and the sell model, it's a lot, right? Because there's multiple stages. But remember, you can have small models. Let me just fucking delete everything. Okay. Okay. That's kind of like your large buy model, and you have your smaller buy model. Okay. And I tried to make them different so that way you can kind of see the difference there. Small time frame buy model within the larger time frame buy model. So yeah, prime, just easiest trades. You only need 1 or 2 good trades a week. There was a beautiful one yesterday. I missed that shit, which I told you. And then unfortunately I did sleep in today, so I missed that one as well. So yeah, I'm definitely on my bullshit this week. So, you know, I missed out again, and that's entirely on me. But I'm still, you know, I'm still going to show you what the opportunities were. And yeah, so this was arguably, to me, so far, it's looking like the best week post election week. Because last week was all right, in my opinion. I mean, I caught a little bit, but nothing crazy. I ended up trading like, I ended up going long in a bearish market, which isn't bad, but can't hold on too long. But when you're long in a bull market, oh, dude, like you could literally, because remember we did the math yesterday. I told you it was like 130 points or 150 points at $20 a point. And we did the math. It was like $2,700 per contract. That was just yesterday. And then, you know, that was ES today. We could look at Nasdaq too. Same shit. I don't think the retracements were as, I think we got deeper retracements in ES than we did with NQ. But what matters is they still, gave opportunity. So what I'm saying is same shit. Original consolidation. We sell off. Consolidation to go lower, right? So that was second stage or second leg of distribution to go lower, right? Zoom out. What did we take? Just like ES, we took Friday's low. Okay, right there. So there's your Y slime model buying below old lows at 8 a.m., right? Oh, 8 a.m. What the fuck is that? What is that? 8 a.m. Is Jordan D in the building? 750 to 810. What's that? There's your 8 o'clock macro. 8 o'clock is right here. There's your open of the hour. And I still can't figure out that indicator because it says it. I clicked on the link and it says it was ghosted. I can't add it to my chart. Ooh, Cameron, that. Now you know how it feels. It sucks, right? It's like, fuck. Right? Low, high, lower, low. And then there it is. There's your macro below the hour. Okay. This is the first time I've looked at it today, by the way, on a 1 minute time frame, just so you know. But manipulation. And then there's an inversion right there. Whew. Jeez. Talk about low risk, high reward. Look at that shit. Buying below the open of the hour. After manipulation. There's your inversion model. Now getting that close to the low with highs up here, if you just took a 1 to 2, well, clearly that was a mistake if you did. 5 minute inversion here as well. Right? Look at that. Imbalance prior to liquidity run, we trade right through that 810, right? Basically the end of the macro, and then bam, there's your 5 minute inversion, which was basically the low risk buy to me was here. The low risk buy was right after manipulation. It's always manipulation and then low risk buy or low risk short. Right? So manipulation, low risk buy. And then this can kind of be seen as a low risk buy, but I would more so look at that as like a part of a first stage of a accumulation. So it doesn't, I wouldn't be so worried about getting the labels right. You know, oh, is this the first leg or is this the low risk buy or whatever? As long as you understand where you're at in the model, you can mislabel it. You could think, oh, this is manipulation, that's the low risk buy. And if you treated it that way, it still would have worked. But the way that I look at it is manipulation and then the NCE or the low risk buy here, and then first leg accumulation and then second leg accumulation to go where? Above these highs and then above these highs, in which we have obviously done very, very well with that. George, -1R is not bad. It's not bad. You know, we're not striving to be perfect. We're striving for improvement, you know, continuous improvement. So, you know, George, after teaching thousands upon thousands of students, it's impossible for a mentor to tell you exactly, you know, where things are going wrong. But, you know, being a break-even trader is better than being a losing trader. That's improvement. You're better now than where you started. But you got to figure out what the issue is. Are you taking dumb trades? Are you cutting winners short because you just want to profit and you don't have the stomach to try and, you know, hold on to a winner for a little bit longer? You know, missing days like this, it sucks. But catching days like this too, catching good trades makes up for so many bad trades. You see what I'm saying? Like, think about that. If you want another assignment, which, you know, you're either going to do it or you're not going to do it. But if you want another assignment, and we've done this before, go in here and just measure RRs. What's the RR from that inversion to these highs? That's probably going to be a 1 to 4, 1 to 5 or higher. What about this inversion here to where we are now, or these higher highs? Probably a 1 to 3 or 4. You know? And that's not to say there wasn't anything in here, because I'm pretty sure there was. Equities is right here. There's probably probably something within that. I can almost bet your ass. Oh, look at that. Yep, another inversion. 1 minute inversion, 5 minute inversion, 15-minute inversion. Look at that shit. Beautiful. Beautiful. Doesn't get better than that, chat. How many inversions do you need? What was once bearish shall be bullish. Look at that. Too easy, chat. It's too easy. Drop a like if you guys got some value today so far. We're pretty much near the end, you know, because again, I started super late. But, you know, if I'm being honest, it's a free stream. You're not paying for it. So we could make that argument, right? Oh, yeah, the code or whatever. Yeah, I guess I can do that. I got a lot of stuff I got to do today, though. George says, I took a few losses the past weeks, like 80 losses, 20 wins, or even worse. Well, Jesus, bro. Sounds like you got to do the opposite of what you've been doing. Sounds like you got to do the opposite, brother. 80-20. 80 losses, 20 wins. Yeah, that is not good. That's not good. But at the same time, though, you got to realize a break-even trade counts as a win or a loss in most analytics. That's the only thing I don't like about Top Step, like their whole... It's not the combine process. It's not the analytics themselves. It's the fact that, to me, anything less than like 0.2% or maybe like 0.1%, anything less than that, whether win or loss, should just be a break even. Because what happens is if you take a break, like let's say I take a break even on ES and I get 1 point, I make $50 or maybe like, you know, $35 or some shit, right? Something around there. That technically counts as a win. And then it brings your average win lower. And I don't like that. It ruins your shit. And it does the same thing with the loss too. Oh, I got break even, but I got slipped 2 ticks on Nasdaq. So now I technically took a loss. I don't like that because it messes up the averages big time. But maybe that's just, you know, maybe that's just the way that I look at it. The hourly open indicator is lit. It helps understand the manipulation and where it's going. Right, exactly. Well, it's always been every time frame, right, has its own open, high, low, close. And that's why when I taught you that that concept, buying below the open, okay, I told you specifically, and I brought that into the MLM industry too. So, you know, they're welcome for that. But any candlestick, okay, don't pick this one. This one doesn't have a wick on the downside. Okay, that's fine. But candles during manipulation or just after manipulation are really, really good buying opportunities. They're basically time-based entries. Okay, look at 9 o'clock. 8 o'clock, manipulation, expansion. Okay, original consolidation of a larger market maker buy model. Okay, well, if that's our target, right? Look where that wick goes. Look where that wick goes. Where does that wick go? Below 50%, which is what? A discount. So we open in a premium. We drop into a discount, and then we expand into another premium. Appreciate that, Hatham. Appreciate that. I've been teaching for a long time. I would hope that I've had students, you know, for like 4 or 5 years or whatever. But it's a timing tool, right? Every time frame. When I look to buy below the open of a 1 minute. How else do you think you get a wick entry? You have to buy below the open of a up candle. You're buying while it's down in the anticipation that it will expand higher. How do you know it's going to go higher? Well, you don't. It's probabilities. But remember, we have what? We have roadmaps. We have the buy models. We have, like a filtering process, buying below 50% of ranges, trying to at least. That doesn't include late entries, but you get what I'm saying. Right? Inversions, where's that? Right near 25%. What did I tell you about 25% levels? What did I tell you about 25% levels? That's where a lot of your either mitigation, we don't really have that here. We got fucking straight down candles here. Okay. So no mitigation, but there is an inversion right there in the proximity of 25%. That is ideal for what? Buying below the open of a 5-minute candle. Or maybe if you missed it, okay, wait for the next 15-minute candle. Even if you get a later entry. Oh, sorry, that's here. 8:15 drops down a little bit. You're buying into that. You're buying into that. Okay, where's 8:15? I don't know. I gotta look at it. Okay. 8:14, 8:15. All right, there's your 15-minute candle. What's it drop down into? There's a 1-minute imbalance right there. You got anything else that would help back you up? You got a down candle here. Right. Trades into that. This is not an inversion. This is a regular normal imbalance, I guess. 8:15, buying below the open of that 15-minute candle. Yes. Why do you think it's always been time price context? It's always been that. Always. When you align time price context, you get literally better trades than anybody else. Okay? Anybody else. Now, it's not about that per se. It's not about being better than the next person or getting better interest than anybody else. But what I can tell you is it's an unbelievable feeling. You call bigger trades than anybody else. Orange juice, no one's beaten me in that ever. Coffee, nope. Won't be done. JP Morgan, probably won't be done. Come on. Both lows in 2023 on silver, that ain't going to be done. But it's not about that. But it does feel really fucking great. But it's about making money, chat. And when you can get better entries, you can get better trade management. When you can reduce risk and take high probability setups, you will definitely perform better. Yeah, I appreciate that. We haven't really talked about Aussie and Kiwi in a long time. I don't use those anymore. I don't trade them anymore, but it's all the same. It's all the same. But anyway, let me say this in closing. If you are struggling as a break-even trader, you need to look at your stops. Because one thing that I've noticed, and I did this too, that's how I know all this shit. One thing that I've noticed about traders who learn how to trade this way, I'm just saying this way. It's not my way. I'm just saying this way. And all the things that I've taught, time, price, context, buy models, sell models, opening price, premium discount, all that shit. What I've noticed is that when traders learn how to get better entries, they think that they can go in and start taking really, really tight stops. And that can hinder your performance as well. Trying to get a super tight stop loss, you get knocked out and the move insinuates without you. And it's like, well, you got it right, but you lost money. You played yourself. That can hinder your performance, but that's on you. That's not on the market. That's on you. You might be afraid to take a little bit of a wider stop. You might be like, well, I've already missed buying below the old low. I've already missed the next candle entry. I've already missed the inversion. Man, this, you know, I feel late. This is so late. What do you mean late, bro? What do you mean late? Look at today. Look at this entire expansion move today, right? And you're telling me this right here, that right there was late? What are you talking about? That's damn near the low of the day in comparison to where it's at now. You thought it was late because you looked at the previous entries that were there and you didn't either catch them or you didn't take them, or you just, you know, sometimes like me, you just get to the chart late, right? But there are other methods to get in, bro. You don't think when somebody designed all this shit, you don't think they designed it in such a way that allows them to get late entries? What does that look like? Looks like a reaccumulation to me. Low, high, lower low, original. Well, this was a level of distribution, right? So what does distribution on the sell side of the curve become on the buy side of the curve? Distribution becomes accumulation. You don't think it's been fucking designed to do this? It's designed. It's orchestrated. It's fucking code. It's like the Matrix kind of shit. How many times do I have to show you something like this to tell you that it's designed this way? It's designed to run lows. It's designed to enter low risk, high reward setups. It's designed to go from bearish to bullish in different stages. There's the first imbalance or the first inversion. There's, I mean, I showed you a 1 minute inversion. I showed you a 5 minute inversion. I showed you a 15-minute inversion. It's every fucking time frame. It's every time frame. And it's all in alignment with the buy model. Everything in here is designed and orchestrated. It's a fucking blueprint, bro. When you go to build a house, you don't just lay the foundation, put fucking walls up. You have things to look at. There's directions. There's specific types of materials and, you know, shit like that to build it a certain way, because what is it called? An architect put all that shit together. Now, I can't tell you who the architect was. I don't know. Okay. Probably wasn't one person. But there are signatures of a creator in price action. Okay. But just because certain people, and I'm not saying that I know everything about price, because I don't, but I do, obviously, given this channel with 800 videos or whatever, you know, I know a lot of things. But that's just because of years and years and years of doing this and watching price and taking trades and all that kind of shit. And once you realize that this is all designed, you can trust it. And once you realize you don't need a super tight stop loss to take good trades, okay? Like, for example, let's say, and man, I'm always like, yeah, in closing, and then I just go off on more shit. I have a real problem, chat. Let's just pretend for a second, okay? You took that inversion and you had to stop at this low. And you were going to say, you know what? I'm a little bit uncomfortable because, you know, this is only like a 1 to 2 and it's not like the greatest thing in the world. But, you know, I've been in trades where it's like, all right, I'll take a wide stop or a little bit, you know, a little bit above that, like at the low risk buy low. I'll say, okay, well, we'll see how we react to this imbalance, because we might hang around or we might dip back into it at equities open. I don't know. You know, we'll see. And it just gets you in and it just rages your direction. And you go, okay, well, as soon as we start printing higher, it's like, oh, damn, we're already over halfway to my TP. Okay. Well, guess what? After a few candles print, all right, that's easy, BE. That's easy.
That's the easiest thing in the world for me to do, is go break even as soon as we're, you know, launching higher. Reducing risk. That's the best fucking thing in the world, in my opinion. So you were all nervous and worried about getting stopped out or getting stopped out on a wide stop. But it's like, bro, you got a good trade going. Now, after that, you just have to submit to the time that it's going to take to pan out. So are you going to have to sit through consolidation? Yeah. Why is that? Because it's the fucking second leg, bro. If you trade the low risk, if you trade the manipulation or the low risk buy, or, you know, something right after that, along the lines of like the first leg or even the second leg, okay, whatever. You do realize that when you get good trades, you have to sit through either the first leg or the second leg of accumulation and distribution. And you know that's going to consolidate. So what are you worried for? Oh man, what if it comes back? What if it comes back? Okay, if it comes back, you don't lose money because you're break even. So what are you worried about? The logic is it's a free trade. You're either going to make money or break even. That's the best possible position to be in my opinion. Well, actually, if it's right before your TP and you put your stop into profit, that's the best, because either you're going to make a little bit of money or a lot of money. You're going to lock in a green day either way it goes. That's the best position to be in. But before you lock in profit, as long as you're break even, and then you know your stages. Okay, bet we got in at a good price, and now we might see the second stage of accumulation. So we might even run stops. We might even engineer a low and then run the lows before going higher. So you're not worried about, oh shit, we got equal lows and an imbalance. I'm just giving you an example. We don't have that here. But I'm saying, what if there was equal lows and an imbalance right below that? It's like, okay, the market might trade into that because it might want to grab stops, and smart money is going to be buying that, but you're already positioned. Just wait, just relax. You know what I'm saying? And wait for its order pairing is what it is. It's repricing higher, and it's going to seek order pairing, meaning the stops that are up here, all the buy stops that are resting here, because anybody who was short, they're going to have stops here, which when you're short and you have a stop loss, that is what? That's a buy stop. And then there's going to be even more buy stops because of the people who want to buy above old highs to catch a potential breakout. So there's definitely liquidity sitting here, but you have to wait for that. If it takes an hour, it takes an hour. If it takes 3 days because you're on a daily time frame, then it takes 3 days. Bro, look at Tesla. Those equal highs were left open for fucking 2 years. 2 years those highs were left open. That's submitting to the time. That's one of the most uncomfortable things for traders, and it is for me too. If you have ever traded on the Top Step X platform, which is pretty cool, I like it, but right off the bat they display the money, and when you're trading NQ at $20 a fucking point, that bitch is moving $100 every couple of seconds or every minute or so. You know, I'm up 500. Oh, I'm up only 300. Oh, I'm up 1200. You know what I mean? And watching that, your heart is beating out of your chest because you don't know, man, maybe I should just take the money. Or you try to move your style. All right, well, I'll lock in at least $200 and then let it go. That's usually what I like to do. Lock in $100, $200 or so, and then anytime it gets over like 1,000, I'm like, okay, I'll lock in probably 300 or 400. You know, it's somewhere that I think it's not going to trade into, so I at least lock something in, right? And then you just wait. It's like the TP is here, just hold that bitch. Here's the last thing I'll say. I know I've said the last thing, and then we've been here another like 12 minutes. I'll end it with this. Damn, I forgot what I was going to say. Oh, that's what I was going to say. If you know your TP is set, if your stop is at break even or if your stop is in profit, that's the only time, in my opinion, that's the only time that I would suggest that you can now walk away. Okay? If you see it running towards your TP, but you're watching the fluctuations and you're like shitting bricks because every time it comes back on you, you start getting scared. Like, oh yeah, we're going my way. Oh fuck, it's going lower. It's going lower. Oh, it's going my way. It's going my way. Oh shit, it hasn't hit my TP yet. Okay. If your stop is at break even or in profit and it's getting close to your TP or it's looking like it's going to your TP, that's the only time I suggest walking away and go focus on something else to take your mind off it. So that way you don't accidentally move your stop too quickly, or you don't exit the trade and thinking like, oh yeah, this was a good day. And then you come back and you're like, oh shit, I only caught a $500 day when there was like a $3,000 movement. And you're going, I knew it was going here. I had all the conviction in the world, but I got out early because I psyched myself out. Don't do that. Try not to. Okay. I'm not perfect. I do it sometimes too. But you have to submit to the time that it takes for the market to get to its order pairing. The second leg's typically the fastest, usually is. But again, you have to go through consolidation. Why do you think I pointed out in that market maker models video the order of models? Why is that important? So you know exactly where you're at. So if you got, I'll say this one more time, if you got the manipulation or the low risk buy or the first leg, great. But now you got to sit through the rest of the first leg and the second leg of accumulation or distribution to go higher. So you expect consolidation before you get your move. Now, days like yesterday. All right, last one, I promise. I promise this is the last one. Days like yesterday, okay, where you get your entry and it doesn't consolidate, it just straight runs. It might consolidate for a couple minutes, but then just run and run. Hey, if it does that, then that's great. You missed out on holding through consolidation. It sprints to your TP. That's even better. And then you can just be done and walk away. But it's not always going to do that. It's not always just going to print like that. Okay? Sometimes you're going to have to sit through something like this. You know, it consolidated for almost an hour. Right? Right about an hour generally. And that's a long time for some people. That's definitely a long time if you're looking at the 1 minute time frame. A whole hour. That's a long time for day traders. That's almost a whole session for day traders. But you got to submit to that. There's no other way around it. Okay? And you know the order. All right? So with that being said, now we can cut it. I said it's going to be a short stream. We ended up going like almost 45 minutes. So, you know, hopefully you got value today. But that is going to be it, man. So if you guys got value, drop a like. I would greatly appreciate that. Again, sorry for starting late today. Canon was on that bullshit. I had to go, fix it. I updated OBS. I restarted my computer like 3 times. I updated OBS and I updated the Canon, whatever it's called, EOS webcam, whatever. Updated that too. That's why it took so long. Downloading that shit. Reinstalling stuff and all that, that's why it took so long. But I think we're good to go. All right. Hatham, this year's just a little bit different with gold. I'm still holding my silver, but we're at all-time highs for gold. So that's like different territory versus when I started teaching that, like in 2017 or 2018, when I was originally teaching that. That was near the lows, but the times are just a little bit different now. But I still believe that we're in the most bullish portion of the year for metals. November, December, January, February timeframe. All right. So be good, man. I will put out the market review later tonight. We'll be here same time, same place tomorrow on Wednesday for next live session, hopefully on time. All right, be good. I don't have my music ready. I don't know what I'm going to play. I like this song.
We started with a goal of love, the kind you only dream of. You were like my best friend, with the right amount of romance. Shifting seasons, we were like sun lit down like falling leaves. Find it so hard to believe what I'm hearing. My daylight dying with your honesty. And I don't understand all the hurt, all the pain. Why you wouldn't try or try again. I don't understand why you beat me that way. Give me a reason, give me a reason. Give me a reason, a reason. Imagine you forever. Whispers of the future, telling me our story.